This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hello, everybody, and welcome to another episode of Breaking Banks Europe. I'm Francesca Aliverti, and today we are going to actually zoom in into our Innovation and Tech series of episodes. And we are going to talk about anti-money laundering and fraud with the two outstanding guests, which I'm going to introduce you in a couple of minutes. But before starting with that, let me actually give you a little bit of numbers to frame more the topic. They are quite scary numbers, I have to say, but we are going to discuss more with our guests. So in the last year, in 2020, financial institutions spent over $30 billion on AML and KYC. And in the same year, they had to pay more than $13 billion in AML fines. And overall, money laundering represents between 2 and 5% of the global GDP. So as I was saying, it's quite impressive numbers, but actually it's good news because the two startups that I'm going to introduce you are working on that. So it means, first of all, that they do have market for what they are doing, which is always good. And they are actually helping to solve a real problem. So without any further ado, let me introduce you Sjoerd Slot, founder of Fraud Dynamics. Welcome, Sjoerd.
Welcome. Great to be on the show, Francesca.
And Andrea Danielli, who spent quite some time at the Bank of Italy, and now he's starting Mopso. Ciao, Andrea. Thanks for joining.
Thanks. It's great to be here.
Good. So, guys, before really getting into the real discussion, I want to ask you to briefly introduce your startups and your activities to our audience, so we all know who does what. Sure. Do you want to start?
Yeah, perfect. No, so I think you already explained this is quite a big issue, not only from the side of the amount of money laundering or the fines, but much more the remediations that banks have to take to actually solve the whole problem. And that, of course, affects their businesses as well. So what we as Fraud Dynamics say is that the fraud or financial crime in general is so dynamic that you cannot solve that with the old world solutions. And what we actually do is we actually have automated the whole model generation of financial crime. So what typically a bank or a payment processor does is they put in their data, they put in their policy and their requirements. And our algorithm actually will find the most optimal model to both represent the quantitative approach of that, as well as the qualitative approach that matches their policy requirements in the most efficient, effective way. And then what we typically see actually is that we can decrease the false positives by 80 to 90% and double or triple the number of true positives. And the whole case there is, I think you cannot solve that anymore with human chasing the fraudster, but you really have to find an algorithm that says, this is the way you can best find the fraudster. I think that's the solution. So people don't have to replace the monitoring system, but they just can replace the algorithm inside of it. I think that's key what we do. And happy to discuss more on how we do it.
Yeah, thanks, Sjoerd. Andrea, tell us about Mopso.
Yeah. Well, Mopso is a startup that is developing two highly integrated solutions to address money laundering regulation, which are Brain and Amlet. Concerning Brain, it is a risk assessment tool that helps banks to find suspicion transaction and hide customer using semantic web technology. So first of all, we are trying to improve and make better the transaction monitoring phase, which is one of the three pillars of money laundering. The first pillar is customer due diligence, and here comes Amlet. Amlet automates customer due diligence using an innovative distributed digital identity. We rely on self-sovereign identity, which maybe I will explain better further, but is a concept that I believe everybody here have already heard. Amlet is able to transfer customer data and identity credentials into kind of digital twins. So you don't have to make again and again a picture of your identity card or your tax declaration. You just have to do it once, only once. And then with these digital twins, you can onboard in whatever banks are using and adopting Amlet. So we strongly believe that automating customer due diligence, we can spare more time on controls and checks and less time on routines. And also, giving the banks data that are machine readable, we are able to integrate better with their IT legacy. That is, in my opinion, one of the most
main problems for that. Of course,
for everybody.
Yeah. All right. So it was good to start with that. Also, and it's quite a privilege to have you here because you are actually working concretely every day in this kind of field. And when I was hearing you explaining also Sjoerd at the beginning about fraud dynamics, I was actually thinking the process that got me preparing this episode, because of course it's not my piece of cake. So I was trying to look a bit around of what was the difference between the traditional way to detect fraud and the innovation that was implemented by solution like yours. And it was quite interesting because what I understood, but correct me if I'm wrong, is that in the past, fraud detection was mostly relying on predefined behavioral patterns. Today, of course, considering the huge increment of digitalization, the different channels a customer could use, the constantly changing behavior of people, the traditional ways are not efficient anymore. So what we can use is actually algorithm, artificial intelligence, and more specifically, I suppose, machine learning kind of techniques. So, as I said, it's not my piece of cake, but at some point of my life, I was almost married to a data scientist. So what he was keep telling me constantly is that the technology can be super good, whatever, but the most important thing is the quality of data. So maybe it's an obvious question for you, but what I was always thinking is that how can you make sure that the data that you get the data that you need, or actually the other way around? So how are you sure that your clients, so the banking institutions, are collecting the right data? Do you see any limitation in that?
Well, I think it's the right question to ask. And it's clear we've talked before, so I think you understood the challenges that are there. The question is, once you have predefined patterns that you're looking for, then you're looking for very specific data points, because those represent your patterns. Even if you use machine learning to go to these predefined data points, you're still looking for where's that data and can I find that data? So then you have a data quality issue. The way we do it, as I said, we do model generation. So we actually turn it around. We let the data tell us what the relevant patterns are. So rather than trying to find what we have defined as probably relevant, we flip it and we actually say, well, let the data tell us what could be relevant patterns that are present in the data, because there's always patterns present in data. Afterwards, you always say, we should have seen this. This money is going to a place where we don't expect it to go. This customer wouldn't have done this transaction, or we don't expect this type of customer to make this type of transaction. So afterwards, you always have a good explanation, and you can even probably find it in the data once you know what's going on. The key problem is, can you find it when you don't know yet what's going on? And then the issue is that it's twofold. First of all, the data. So can you find patterns that are relevant, which are there? And there's always patterns there. unless you have a written piece of paper. But probably even then, somebody can find a pattern. And the second is, are you looking for fraudulent behavior? Or are you looking for legitimate behavior? So we flip it up twice. First of all, we look at the patterns that the data tells us are relevant. So we find machine learning that gives us those patterns. And secondly, we find patterns that represent the legitimate behavior of a customer rather than the illegitimate. So we don't need to know yet what the fraudsters are doing tomorrow, but we can already predict how probable it is that this pattern is legitimate versus illegitimate. And that helps us really to find both in typically low quality data sets, as well as a very high dynamic environment where the fraudsters and criminals continuously change their behavior, to still find relevant patterns that can be detected and that can actually efficiently detect fraud.
Yeah, it makes a lot of sense. So it's more try to understand where the legitimacy is in the process instead of really looking for the fraud itself. Andrea, do you have any experience with that as well? What's your take on that? I think if you work with banks, you should.
Yeah. A lot of experience about bad data and a lot of reflection about this issue. I think it's my CTO's fault if I am quite skeptic about how machine learning could help in transaction monitoring, for example. Because first of all, there is a problem about data, not only quality, but quantity. If you are using neural networks, you need a lot of data about transactions, but we are talking about millions of transactions. And to find millions of transactions, you have to work with big banks. You cannot work with small banks. And that's a problem for a startup, because significant banks sometimes distrust startups. You are too small to work with us. That's what they are repeating all the time. So first problem is, how can I teach my neural network to find a pattern if I don't have data? That's the first problem, and that's why we are not working with machine learning techniques, but we prefer to work with a knowledge graph and the semantic web technologies. So what we are trying to do at Mopso is to find a connection between different actors in the money laundering. We are trying to disentangle complex operation, because a single transaction don't bear a lot of information. You need absolutely to understand what's the network and to find a place for this transaction and for who is the beneficiary or the ordinand. So we try to create the network and then to apply over the network PageRank algorithm on other algorithms able us to understand if the people is relevant or not. And then we try to reconstruct also the economic purpose of the transaction. So for us, it's software that help an analyst. And of course, I am the analyst because that's my previous work was at the Bank of Italy. Also, there's a problem about data disponibility, data. And to me, what is really an opportunity in the next future is open source intelligence and open data.
And we will get to that also.
Yeah, okay.
We will get to that in some minutes. And I have also another question before getting to more the times that we are also living and also the regulation attached to that. When you were talking at the beginning, Sjoerd, you were mentioning also false positives, which is also something, I mean, for me, it's that I'm not in the sector. The advantage of detecting anomalies is a clear advantage, of course. But what I can imagine is that also on the other side, being able to detect false positives is also quite a strong element in terms of cost saving and time saving for a banking institution. Can you tell me a bit more about that?
Yeah, absolutely. So I think it all comes down in any algorithm to both sides of the algorithm, which is the true positives and the false positives. And so anomaly detection helps you to find more true positives that you previously were not detecting or were not able to detect in time. But the good thing, because of the pattern recognition, is that you can rule out a lot of false positives. And I recently got into an interview from one of our clients, and they were saying because they reduce the false positives so much, there's a big cost benefit to that. But I think in the current day and age, I think it's besides the cost benefit, it's also a relevance matter for the analyst that's investigating. So if you have to go through 100 or 1,000 alerts to find one true positive, that's really, well, it's not really a relevant job anymore, or hardly a relevant job. And the question is going to be, once you get to that true positive, are you still recognizing it because you've been clicking through so many other alerts? So if you want to raise the quality, and I think we also see regulators pushing for that, is that you need to get the right balance between the true positives and the false positives, both from a cost perspective, because otherwise you're going to be out of business at some point, as well as from a quality perspective, that you don't want people to numbify based on all the vast volume of alerts that they need to handle to find, the needle in the haystack. So what we find is very important is to both increase true positive as well as drastically reduce false positives to come to a more proper balance and actually find, the fraudsters and the criminals that are out there.
Yeah. At the end of the day, efficiency is the key. So I mean,
efficiency is key, I think, but also I think at some point, especially nowadays, I think relevance is key as well. Because there's a lot of people working there. It's hard to find the right talent. And if talent is leaving because they don't feel they're doing any relevant work, that's a big risk for a bank as well. So, and we see this happening with our clients, that in the old days they had maybe a 3 months, 6 months turnover from analyst staff because of just simply clicking through a lot of alerts. And currently they're seeing applications coming in because people find it more relevant in the end to work there.
Makes a lot of sense. And you were mentioning also the urgency from the regulator in order to get into this field. And my actually next question to Andrea is also about which kind of regulation are going out recently, but more on the customer side that we mentioned before. So the European SCA, the strong customer authentication in the PSD2 context, has just being enforced from the 1st of January, actually, a little bit late from what we were expecting, but it finally did. So in Mopso, and especially Amlet is actually quite involved in the authentication of the consumer, as you were saying before. So which kind of implication you see on the European level and also on a global level?
Well, it's a tough question, really, because when I was working at the Bank of Italy, I was dealing with customer complaints. So I remember there were a lot of complaints about phishing, fraud, scam, all this stuff, and it was a huge problem for banks because they were obliged to refund the victims at least half times to refund, and also for customers that were forced to complain and begin a long and sometimes stressful confrontation with banks. It wasn't that smooth. So I hope that the strong customer authentication regulation will reduce cyber threat to banking customers, and that will have a good impact about online payment that will be more secure and thus widely adopted. That's the good point to me. But I also have personal bad feelings, because if I think of myself as a customer, well, some customer authentication has deteriorated a lot experience.
The process is definitely not smooth.
Not at all. I'd like to share with you a recent history by myself. This system is so sophisticated that just a few days ago, I couldn't make a wire transfer. I was afraid that something was not working well in the banking app. I was ready to ask and to call the customer care, asking what's wrong with my app, because I always have problems with my app. But I try again to type the PIN. And I was just not remembering the right PIN because I had previously changed my PIN. But the app was so brilliant, so smart, that it pretends to generate a real OTP. But in fact, it was generating a wrong OTP without informing me. So it was hiding the problem. And I think it was just by chance that I was able to understand what I wasn't doing wrong. And that is just one experience of somebody that is working in the digital domain. I don't know. From a business perspective, you can see that there is a lot of good implication, a lot of potential opportunities, because I am seeing that there is a really relevant growth of operator in the field of authentication. I can say I'm discovering a new player every week. Really, a new competitor. At the same time, I say, well, there is market, but also, oh no, another competitor. But in practice, that's the theory. But in practice, when you look at the market and the intermediaries, the financial intermediaries, they are still using one-time passwords sent through SMS. Yeah. With all the biometric stuff, with all the innovative technology, we are still relying on SMS and smartphone. And somebody add an additional PIN. Wow. I don't see that's a really cutting-edge innovation. It's just adding another PIN. So
another layer of
exactly,
complexity, probably.
Exactly. Yeah. And you have to remember. And sometimes, so you use the same PIN, whatever. and sometimes it works. Okay. But trying to conclude, and concerning Amlet, to me, the strong customer authentication is a good point and a good opportunity, because it stresses so much customers that we present Amlet. People is amazed by how smooth is our process. And so it's that kind of opportunity. Something is not going well, but we have an answer. That Amlet.
So they can see the difference. They can see the difference.
Exactly.
It's even more obvious.
It's even more obvious, and that's amazing, really.
Yeah, that's definitely good. Sure. Do you see any difference with Dutch banks or the way these kind of things are handled?
I think we've all have certain experience that are slightly less positive. Let's call it politely. But I think also the pressure is on definitely because of the fintechs. The banks really have to move forward, and I think that's a good signal. So that really means that people have to experience a certain user experience in the way they make their transactions. And what we really find interesting right now is, well, if you look at the general retail space, so not even the banking space, but if you look at, for instance, Amazon and all the supermarkets that are doing just walk through and pay without even going through something. I think that's interesting because that's all based on monitoring. So that means, if I know what you're doing inside my bank, if I know what you're doing, and if this is something that's legitimate and we can verify, then the user experience can be lowered, or can be, the experience can be improved, but the checks can be lowered because you're monitoring more in the background. And I think that's why we see a lot of parties, trying to investigate. Of course, the regulation is moving behind on that one, but I think the pilots and the innovation on that space is really improving.
Yeah, and you were mentioning also the side of the e-commerce, because at the end, of course, the protection of the consumer is one side, the bank is definitely one of the players, but let's not forget that a smooth experience for the customer means that I'm actually going to go through my purchase, which means that also on the e-commerce side, it could be quite a good advantage. All right, let's go for a very short break, and we will come back very soon.
The FTS Group builds innovation ecosystems. We engage incumbents, investors, entrepreneurs, technology partners, and regulators to build trusted and connected fintech tribes around the world. We firmly believe that innovation in financial services will truly improve people's lives. Learn more on ftsgroup.eu.
And we are back. We are here with Andrea and Sjoerd talking about AML and fraud. We were discussing before about, of course, regulation, and we deep dive a little bit more into the tech side and the technology around AML and fraud detection. And right now, what I want to discuss with you guys is more the changing behavior we experience in this period, of course. Because we were saying before with Sjoerd that, of course, the behavioral patterns are quite important in order to detect what is fraudulent and what is not. And also with Andrea about the transaction, where the transaction is coming from, what are the economical purpose, did the customer did the transaction or not? And it's quite interesting because in this context with the pandemic that we all unfortunately are experiencing, I can imagine that the behavior of people changed quite dramatically. I mean, we are all at home, making a lot of useful, unuseful purchases, spending much more money because we are bored or because whatever, we cannot go to the restaurant, so we try to spend money on other stuff. So on one side, I can imagine that all this new digital push kind of allowed the fraudulent intent to increase in some terms. But on the other side, also, I can imagine it's a little bit more difficult to understand what is a correct pattern and what changed, because of course, as a consumer, I might do now something I wouldn't have done before. So, sure, what's your experience in these couple of years now, actually?
So yeah, I think exactly, and I think we were quite concerned about this as well. Definitely when the pandemic started to become more enduring. I think in the end, what we saw is actually an increase of the performance of our models, which actually, honestly, was even surprising to us because the theory says behavior is changing, so you probably won't be able to find it as easy as before. In practice, so we found minor 5% improvement in performance, but definitely not a decrease. And so we started to investigate. So what went right here? Sometimes you investigate what went wrong, but this time we wanted to understand what went right. And I think when in the end people they change their payments. Of course, they go from a lot of small payments in the different shops on premise to online payments. Typically larger payments because they do their orders in larger bulks. But they don't really necessarily, you don't suddenly buy significantly more food. You don't buy like 100-fold more of food. You don't, you might buy a bit more electronics, but you would typically then see that a lot of people are buying more electronics or a lot of people are doing things. So unless the half of the world is fraudulent, and that doesn't work. So because we look at normal from a context behavior, and I think Andrea tipped on that as well, you need to check within the network, within the different entities that the payment is consisting of, is this normal and do we see a general pattern here? And there we noticed, because everybody was changing their behavior, this wasn't a local thing, this wasn't just one city or one group of clients, you could see it across the data set. So we actually found that the models could still actually predict it quite well, because there was a general movement. And so therefore because our base assumption is that the majority is right, which I think is a healthy democratic principle.
Very Dutch.
Very Dutch indeed. But that's what we do in our data science approach as well. We say, if the majority is moving that direction, then it's quite feasible that is probably a legitimate direction. And therefore, we could see that our models were adapting to it quite quickly.
Of course. So actually, the fact that the pandemic was worldwide was quite a good point on your model. Let's put it like that.
Yeah, so it wasn't a local pandemic in one small town or with a
Exactly.
few people. I don't think worldwide matters for us because typically, those data sets are national based, but definitely we could see it across the whole data set. So that definitely helped. And typically a model adjusts quite quickly. If a lot of people, even if you have a town, after 2-3 days, you, at some point you figured out that this is normal in this context. So yeah.
Good. Andrea, how did you face the last years? Do you relate with what Sjoerd was saying?
Yeah, definitely. From a money laundering point of view, when you see a crisis, the organized crime find new relevant opportunities. So we have to be more prepared to fight money laundering. And above all, we have to be more focused on emergency governmental loans, because a lot of companies have been probably infiltrated by organized crime, and they are willing to take all the money they can. So if I see the crisis from this perspective, something has changed. There is more pressure on money laundering, and that's why with Mopso we are entering the market right now, because we are also helping one of our customers to face the pandemic. Really try to find if there are patterns related to health, for example, because as we know, there are a lot of fake masks, a lot of fake medical instruments, and so on. And in this perspective, we are broaden our analysis, and also we had to adapt our way of work, because we are not all relying on usual money laundering schemes, but also we need to understand if there's some connection with, for example, governmental procurement about masks and about medical and health related stuff. And that's to me is interesting, because it shows us that for people like me and Sjoerd working in money laundering and fraud, that to me are really very well connected. Yeah, we have to change our approach as it needed, and we have to be all the time very, very flexible. So from a technological point of view, there are a lot of tools that we can use, but the most important tool is the analyst, is the people beside technology that is willing to fight organized crime. But in my opinion, that's not only a business, that is also a kind of mission. I am Italian, as you know, we have a lot of problem with organized crime.
Yeah, it's more probably trying to connect all the dots. It's not really one solution to the problem, but as you were saying, trying to connect the regulation, the whole like a small puzzle. Okay, so try to put everything together. This what I just said allows me to get to another topic that we were slightly touch upon before, which is about the fact that this is quite a sensitive topic. So your main point of interaction, I suppose, are financial institutions, of course. They are probably relying a lot on a traditional way to detect fraud or to approach AML. So in general, within the fintech scene, we keep talking about collaboration, competition, the relationship between the banking scene and fintechs. But I can imagine that in a topic like yours, in a sector like yours, this could be a little bit more difficult, because there is a trust kind of scheme. Banks are maybe a little bit more reluctant in getting into a collaboration with a startup, because the topic itself it's quite sensitive, as I was saying. Sure. What's your experience with that? Do you see banking quite open? I mean, in the Netherlands, it's very interesting because we have two different geographies here. And in my experience, I was living for 6 years in the Netherlands. The Dutch banking system is much more open to collaboration than the Italian one, maybe also because we start from a very different developing perspective, let's put it like that, or we have different kind of problems. But yeah, I'm curious to understand your point of view, Sjoerd.
Well, I'm not sure how. There's of course differences, and I think I don't think Italy and Holland wants to get into the contest who's the most criminal country in Europe. So I think we challenge each other quite properly. But I think
it's also the way you react to situations, though, if I can say.
Absolutely, yeah, that is true. But so I think your question was more like, how do banks cooperate? I think definitely the topic is very sensitive. It's not so much the data. I think they can typically see, also Andrea being from a bank, my background isn't there. So we understand how banks work. So they typically see quite quickly that we come from the domain. We understand the sensitivity of the domain. But then again, the sensitivity is much more against the size of the problem. You can feel, a nice front end pilot. But if you feel, of course, in money laundering, there's a bigger risk to that. So that's more the risk appetite. And so we typically tell them, start small. Really try to start as small as possible. And so take, a business unit, take a country. Even if you get enthusiastic about the possible results that we can deliver, but let's try it out small so that we can build trust internally. And I think that's one of the key things for a bank to take away is that there is definitely innovation and it's available, but you want to manage it as an innovation first, and then once you've got to know each other, once you've proven that this works on a small scale, then you can really upgrade it. It's just like dating. You start with a dinner, you don't get married at first sight. And I think innovation is exactly the same thing, even in a sensitive topic like financial crime. You want to start small, and then it's quite easy, if things fail or if expectations were different or whatever, there's no real risk because you anticipated that this was, a pilot. And because it's a pilot, then you can learn a lot, you can share ideas. And I think you mentioned that the Dutch banking sector is ahead. I think that typically is also a first mover disadvantage. So what we see a lot, of course, is a lot of banks thinking, we can handle this.
They can do themselves.
We can do this ourselves. What we actually see in banks that, well, some people in the fintech scene might seem less advanced, or at least not openly advanced, let's just say. There are definitely people in there that are moving the innovation agenda, and they are taking big steps because they're taking, that's how the market works. If you started later, you have a massive advantage because you can just skip all the initial steps and start where everybody's at the moment, rather than still clinging on to your last success. So if you don't have any success to lose, you can go straight to the end and move in where everybody's at. So we are seeing that
many times legacy is.
Legacy can be quite advantage, especially and our algorithms work with legacy systems. So the cool part is you don't need to change the whole architecture of your legacy architecture before you can get started with us. So because of our design and because we know how the market works and how banks work, you don't want to start replacing legacy first and then only being able to innovate. You want to be able to work with the legacy, and then of course people can decide to upgrade the legacy or whatever. But that should be a parallel discussion. But we can see people really taking big steps in countries where you might not see banking as advanced, or maybe certain types of bank that are not perceived as very advanced.
Yeah.
But they know they acknowledge they have an issue. They acknowledge that they might not solve it themselves, and they also acknowledge that start small. So let's just pilot this, test this out, and if this works, then we can sit down and roll out big, and that works.
Yeah, this is quite good and rational way of thinking, to be honest. Andrea, what's your opinion on that? You had a lot of experience, especially with Italian banks, so I think you have an opinion on this one.
Yeah, absolutely. First of all, I agree with everything Sjoerd said before me. Everything, because talking about the first mover disadvantage, that is something that all the Italian banks are experiencing. They are very conservative. They aren't willing to start something too difficult to handle, and that ask them to find different way of thought and solve problems. Sometimes comfort zone is really a trap for banks, and it is something that I am experiencing, and I experienced before when I was at the Bank of Italy. But to be honest, what I see is that that's a complex market, because on the supplier side, like myself and Sjoerd and others, there are a lot of nonsense. There is a lot of people that is trying to sell magic solution, but there is no magic solution at the moment. There is no silver bullet. There is only a lot of serious work that needs to share a path, a common path together. And so I'm talking, when Sjoerd was talking about piloting, yeah, that's the way to start, because piloting is a common pathway. We work together. I'm not only selling you something, because I want to understand how my algorithm, how my software is working. And at the same time, you are experiencing something new, and you are learning something new. So to me, what is important is to create this ability to share and to have common goals with the customers. And it's kind of really of team working. And I think I am able to create a connection, because I'm coming from the banking sector, so I really know very well what trouble and problem they are facing. And all the time we are speaking the same language. And I think also we aren't able to be completely alone in our quest for the development of our technology, because the frameworks are already changing, continuously changing. For example, in machine learning, how many techniques exist right now? How many techniques will exist? Also adding, for example, quantum computing. In the biometric sector is the same. You can use your face, you can use your fingerprint, you can use your eyes, and it's changing. And every solution has trade-off. And to manage all this enormous landscape, to me, it's unbelievable. You need to work together with other startups, with other, also with the incumbents that need to share with you their trouble. Because sometimes startups has this problem. They come with their solution, and there's no problem. There's a solution. There's an answer.
Yeah, and if there is no problem, that's a problem.
Yeah, definitely. But I think a lot of innovators are really when they innovate, they experience the rush, the adrenaline of discovering something new. But when they talk with banks, they freeze.
Completely, yeah.
Yeah. So to me, we need to be serious. We need to work together. We need to solve real problem. And as you mentioned at the beginning, in our sectors, we have huge real problems.
Yeah, many times, the fact is that probably there are also from the banking point of view, they expect ready-made solutions, but it's much more, as you were saying, a kind of a path, hand in hand, moving together and experience what Sjoerd was saying. The pilot is at the end the most efficient probably way to move. I have one very last question before closing up this episode, and I'm not sure how relevant is this to you, but I'm quite curious because it's something that got me interested lately, and together with Matteo Rizzi, the executive producer actually of the podcast, we are keep discussing about that. So we all know that, there is all this wave about crypto exchange. Every day we hear a news and a buzz because Elon Musk said something, the China government said something else, whatever. It's an ongoing discovery every day. But what got me even more interested is all this new phenomenon of decentralized finance. Also because it's a little bit more intellectually, let's say, challenging, because it's a whole possible new way to approach the financial services, let's say. So I'm curious to understand if this whole wave impacted you and your sector in any ways or not, and if so, how or what do you expect to come? It's a question for both. So who want to start is more than welcome.
Get started. No, so I think we see that trend definitely as well. I think not, of course, at the scale as the global banking. The global banking sector itself is so huge that of course, even if it's big, we're still talking minor impact on that level. But yeah, I think value has always moved around. I think we started off with chickens, then we moved to gold, then we moved to paper, then we moved to online. So I think that's something that you need to consider, that the payment methods itself, the finance methods itself are dynamic, and so as long as it's digital, we can put an algorithm to it. I think that's the good part of it, and that's also what we're seeing. We are having conversation with people who are really deep into that market, and they're telling us the same thing. Once it becomes larger and it goes out of these sort of first mover people who are willing to take risk, who are willing to they want the experience, they want to experiment as well. But at some point you get sort of normal people involved, and then they want trust and they want security and they want all other stuff that maybe experimenters don't want necessarily. And so then it becomes really relevant how that's solved. So we are definitely looking into it. And I think what we see right now is, even if you make a different type of payment, it's still value going from one person to another, even in no matter what. So I think the technical architecture will be different, but the algorithm side will be relatively similar.
All right, thanks, Sjoerd. Andrea, also in Mopso perspective, maybe I was even thinking about the whole credit lending NPL world. Was how we should approach that.
Wow, that's huge. I must confess, I stopped following the cryptocurrency world.
Just for your mental health.
Yeah, because there are so many news, and also, like for example, yesterday I was talking with somebody that is in this sector with the kind of smart contract platform, and I was trying to understand which kind of proof they were using. In Bitcoin blockchain, you have the proof of work. Then there is the proof of stake. And then somebody had the Byzantine fault tolerance. At the end, I had an headache, and I tell him, okay, I understood everything. It was pretty clear, but it wasn't the case. Okay, apart from that, what I see is that there is a lot of potential on the trade finance. And in general, whenever you have to handle guarantees, escrow services, I think that smart contracting are extremely well suited to handle this domain. And I think that they can allow also for small company to use these financial services, because they could be cheaper and probably easier. So from this point of view, to me, there are a lot of opportunities. I'm quite worried about peer-to-peer loan. I don't know, maybe it's my previous experience, as I was saying before. I was working at compliance and customer care, and there were a lot of trouble about loans, about people that weren't able to repay. Yeah, and so to me, it's difficult to understand how average people is able to choose who to lend and who to not lend. Even if you spread the risk because anybody can invest on different person. I think we probably face an adverse selection. If you are working and asking for a loan on a peer-to-peer platform, probably it's because you weren't able to ask for a loan at
to have it somewhere else.
Yeah, and so probably your credit risk profile is not that good, and that's really scare me. And so I really don't know how to solve this problem, because I think that the big issues here is about trust. Money is all about trust, and of course rules that enforce trust. But when we are in a DeFi world, trust is all on cryptography and the algorithms. And I cannot see at the moment any standard, any technology able to impose, any player able to impose, any decentralized exchange able to impose, because they are decentralized. So everybody's doing what he wants. And that's, of course, the opposite in the banking sector. You have the central bank that at least decide, regulate, and sometimes also defend customer when they have trouble. So the centralization is really interesting, but at the same time, to me, I see a lot of trouble, and I also heard a lot of scam concerning initial coin offering, sometimes Ponzi schemes. So I don't know. I still worry and not convinced about what is happening now.
Yeah, I suppose we need to wait and see. But of course, I mean, the good side of any decentralized system lose completely the advantage when you probably regulate it. So it's always a kind of balancing between the risk and the positive side. But we will see. I mean, I definitely don't have the answer, and I will keep following the graphs of my investments, hoping that at some point I will become also a crypto millionaire. But I don't see it coming so quickly. So guys, before leaving, let's just give our audience a little bit more info about your startup. So where can people find out more about the Fraud Dynamics and Mopso?
Yeah, so Fraud Dynamics, I think just go to the website, frauddynamics.com, if you want to discuss, transaction monitoring algorithms or processes. And I think, as Andrea also said, I think there's a lot of randomness around machine learning. So if, domain expertise, I think, combined with machine learning, I think that's the key thing. I think that's also where I think both Mopso and us make a difference, and we take the domain expertise. So if people want to discuss, if they just want to investigate what the options are, then go to the website, go to our LinkedIn page, reach out to me directly. We're always happy to discuss and understand the problems.
Great. Andrea, where they can find something more?
It's the same. You can find us at mopso.eu and amlet.eu. Amlet without H, because it is AML.
Not like Shakespeare character.
Exactly. I cannot ask for Shakespeare. Is too much.
Too high reference.
Too high reference for us.
All right, guys. Thanks a lot. It was very nice having you in this episode. Thanks, Sjoerd. Thanks, Andrea. Hope to see you face to face somehow shortly. And thanks a lot to our audience for following this episode. Remember to keep following us on our social media and streaming platforms. And let's see you all next week. Ciao. Thanks, guys.
Thank you very much. See you next time.
Thank you very much. It was a pleasure.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.